Welcome to the 401k Audit CPA Success Show, where we're 100% focused on helping companies across the United States prepare for their 401k audit. If you have 100 eligible participants in your 401k plan, then this podcast is for you.
Hello, everyone. Welcome to the 401k Audit CPA Success Show for this month's podcast. This is Kim Moore with Summit CPA Group, a division of Anders, and I have Karen Hill, the audit manager, here with me as well. So welcome to our podcast. I'm going to start the podcast today by doing what I usually do at the end and throwing out if you have a suggestion for the podcast. If you have any questions, something you'd like us to cover that we haven't covered before, have a question on a topic that we have covered, feel free to reach out. You can reach out directly to me. My email address is the letter K, Moore, it's K, then Moore, at Anders, Anders, CPA.com. Again, that's K, Moore, at Anders with an S, CPA.com. So feel free to reach out if you have any questions or suggestions for a future podcast, or if you'd just like to reach out. We'd like to get in touch with any of our viewers. Karen, this topic for this year, we are recording this podcast here at the beginning of November. So we just passed Halloween, looking forward to all of the holidays coming up. And I know it's a busy time in the office for everybody as you're trying to manage getting stuff done and holidays and probably some vacation time and all of that. But we don't want to forget all the stuff that we need to do for our 401k plan. If you are the plan administrator, plan sponsor, plan trustee for a plan, we thought we'd spend a little bit of time today talking about year end. So planning for things you need to do to kind of wrap up for the year, and then things you need to do to prep for what are year end activities, but they'll actually happen in the first part of the following year, which will be the beginning of 2023 for us. First thing I had, which is near and dear to our heart, is am I going to need an audit? So, when I was preparing for this and put some notes together, obviously that was the first thing that came to my mind. Things to consider here. First off, are you going to need an audit? So if you've never had an audit before, maybe didn't even know that there was such a thing as an audit, what drives that is the number of participants in the plan, and you need to consider three numbers when you're trying to come up with that total number. Obviously, anyone that's in the plan participating, having with deferrals, they would be included in that count. Anyone that's in the plan remaining, they've terminated employment, but they left their dollars in the plan, so they still have an account with the plan. They would be included in the count. You also need to include anyone who's eligible to participate, but maybe has elected not to participate. So someone who is eligible but chose not to participate or gave you a decline form, said they didn't want to participate. You add up all those numbers. Generally, if it's over 100, you need an audit. There's something called an 80-120 rule. So if you're between the 100 and 120 and you filed a short form, 5,500 the prior year, you still can file under short form until you go over that 120. So generally, definitely once you get over 120, you need an audit. So first thing I would say is if you have never had an audit before, getting to year end, check your, those numbers. So check what's in the plan currently, check your payroll. You can talk to your service provider and they can help you out there too. If, you're getting close. So if you're thinking, oh, I'm right around 98, 99, or I'm at that 119, 118, then, that's when you want to be checking with your service provider. Oh, we almost had a guest.
She realized.
See, that's what happens when you work from home. You get guests, unexpected guests sometimes.
Yeah, she realized quickly we were recording and.
See, and that's what can happen when you're getting close to those numbers. Unexpectedly, one more person joins, and now you're over your 120, and
yes,
that's what can happen. So that's why we recommend that if you're sitting at, I have 20 employees, 40 employees, probably not. You're probably not going to gain that many. It's probably not an area that you need to worry about. But if you're getting close, you're getting up in the 90s or you're into the hundreds, an area that you want to be considering. If you are thinking you're going to flop over that 120, you're going to need an auditor. It is best, and we encourage everyone to start researching auditor selection early. Audit firms, their schedules fill up really quickly. There's going to be fewer and fewer auditors that do benefit plan audits, so it's really important to get started. Don't wait till the last minute and say, "Oh, I got plenty of time." You really don't. So to get started as early as possible. I also like to bring this up at the end of the year because most people are putting together their budgets for next year. Obviously, you'd want to budget for an audit. Audit fees that can vary, obviously, depends on the firm, depends on the complexity of your plan. First-time audits tend to cost a little bit more just because it is that first-time audit. So again, another reason to start researching early so you'll know the amount that you need to budget. Also, we have on here begin gathering documentation for your audit. That would be your general documents, things like your plan document. You want to make sure that you're keeping your year-end payroll information. That's going to be very important. If your HR documentation isn't all put together, you want to maybe do a real quick check on that and make sure that stuff's all kind of put together and in good order, because those are the areas primarily that your auditors are going to focus on, is HR, payroll, and the plan documentation. So if you got a little extra time here at year end, or maybe you've got somebody that's helping you out as you're getting ready for year end, that might be a task that you can give to them. Another thing I would mention is if you have been having audits, now is a good time to be thinking, do you want to continue with that auditor that you've been using? Most folks do. They find an auditor and they'll stick with them because it can get expensive and it can eat up a lot of extra time to switch firms. But maybe your auditor is going to retire, or they've told you that they're not going to be able to do your audit next year for whatever reason. Again, now's time to get started on that search. I don't know, Karen, anything else you can think of on the auditor topic?
No, not really. Nothing I can think of.
Okay. It's obviously something near and dear to us, but it does take time, especially if it's your first audit or you're switching auditors. In either case, it does take time to find a new auditor and get your stuff ready. And so
I would say, yeah,
plan early.
I guess the one thing I would add is make sure you start at that process early, because you're going to have a lot more flexibility on the time frame of getting your audit completed if you engage somebody earlier on in the process rather than waiting till late. Because if you wait until July, they might not have much capacity at that point, and you might have to just if it's a brick and mortar operation that will come out to your workplace and conduct the audit on site, you're going to might be limited on what their availability is to do that.
Yeah, absolutely. And there's different options. Obviously, we've done other podcasts about selecting auditors and that. So if you find yourself into this situation, you might want to check out some of those previous podcasts, or drop me a note, and I'll be throwing my email out again at the end of the podcast. Drop me a note. Be happy to send you some materials. We have a couple booklets on selecting an auditor from both the Department of Labor and the AICPA, which is the governing body for accounting firms. So both of them have put out nice little easy to read short booklet about things to consider as you're selecting your auditor. So if that comes up for you, just drop me a note and be happy to share those with you. Karen, another thing as we get to the end of the year is fidelity bond.
Yes.
What's your thoughts on that?
Well, the plan assets need to be covered by a fidelity bond, and they measure the bond based on the beginning of the year assets. So for 2022, you would want to look at what were your plan assets on January 1st of 2022 for the 2022 audit. And the general rule is it's 10% of the plan assets up to a maximum of $500,000. There is a minimum $10,000 as well if it's really small. But usually if you're needing an audit, your assets are going to be well over the minimum amount that you would need. Like I said, up to $500,000. You want to make sure that you have, because we've had cases where clients have had a bond, but they haven't had it with an approved surety. And there is a website on the IRS website. You can go in and you can look, and they have a listing of all the companies that are approved to carry these bonds. And you also want to make sure that if you do already have a bond, make sure that you have it renewed, and that if you renew it and you don't have a built-in, sometimes they have a built-in, and I'm going to, the wording,
Like escalation.
escalation. Yes, they have they have an escalation clause in there. Whereas if you said, okay, well, I only need $200,000 when I started, when I first got the bond, but they'll put an escalation clause so that if your assets go over that amount, then it'll increase the bond. If you don't have that escalation clause, you want to make sure when you renew that you renew it for the proper amount.
Yeah, and the reason we bring this up at year end is of course looking forward to next year, because that measurement period is going to start again beginning of 2023. Unfortunately, the markets tended to be heading down, but what can happen is maybe your company isn't growing that fast, maybe the participants aren't growing that fast in your plan, so you think, oh, there's no need for me really to look at the bond, but you got to remember it's based on asset value. So if the market were to fluctuate highly right at that time where you're going to be measuring that for bond purposes, that could affect it as well. So I think having that kind of escalation provision in the bond is a good thing. Costs a little bit more, but these bonds are not all that expensive. No. It kind of is upsetting to me when a client says, well, maybe a provider's told me I don't need to have that bond. I don't want to spend the money. Well, it's not that much money. It's good protection, because one of the reasons you have that bond is if something happens to the funds as they're being transferred around, that bond is providing that backup coverage. It's to protect the assets of your employees, basically. So they're a good idea. They are required. I mean, it's a federal requirement that you have them. But I think having that escalation option there, like I said, doesn't add that much cost to the bond, but it gives you a lot of extra coverage and can protect you. I mean, we've seen places too where they're a type of employer that they go by contracts. So their business is all based around contracts that they have with other entities. Maybe they get a very large contract and that happens very quickly. So all of a sudden then they need a lot more employees to cover that contract. That's going to make the assets jump. You may have money coming into the plan, rollovers into the plan because of that. So very quickly the assets can grow, and now your old bond isn't sufficient. So now's a good time. Look at that. Just double check it. Only takes you a minute. It is an area the Department of Labor has said that they're looking at. It is put on the Form 5500. When you file the 5500, regardless of whether you need an audit or not, you will still have to indicate that you have a bond and the amount of the bond. So it's an easily searchable item for the Department of Labor. So it's an area, don't get caught up. It's, like I said, they're inexpensive. They're easy to get. There's hundreds of providers out there that provide them. If you are hearing this and you're thinking, I don't have a bond, how do I get one? Talk to whatever insurance provider that you deal with. If they more than likely have access to an entity that provides these types of policies. If they don't, they can help you find one. So this is easy. This is an easy area. Don't have a compliance issue over this, because this is an easy thing. So next thing I had on my list was planning for year-end reporting. This part's not so easy. This is an area a lot of people get tripped up. Couple of things here, and one of them I kind of already mentioned. A good thing to always maintain is a copy of a year-end payroll report. And I would keep that for several years, because you might need it for a 401k plan audit. You might need it for an insurance audit. You might need it for an IRS audit. I mean, there's a lot of different types of investigations, audits, et cetera, which will rely on a year-end payroll report. And that year-end report should cover the whole year, not just the final payroll. So it should cover all the payrolls for the year, should cover all the employees, should show you their compensation and the different components of compensation, the deductions and the different types of deductions, and then, of course, it's going to come to a net pay for that employee. And then we like it when it totals it at the end for all of the company as well. That just makes it a lot easier to work with. If you have a payroll service and you can get in and you can pull reports easily, you may not need to pull an actual report and save it. I still think it's a good idea to pull one and keep it. What if beginning of next year, whoever in your company is the decision maker says, hey, we want to switch payroll companies from A to B. You're not going to have access like you would have had if you were staying with that same payroll company. So I always think it's a good idea to to pull down one of those payroll reports and keep it. But there's a lot of different kinds of activity and reporting that your auditor may need. So if you have been through audits before, you're going to know what your auditor is going to ask for. So as you're running that final payroll, I'd go ahead, run those reports, get them ready. That way, when the auditor asks for them, you can just say, here you go, and you don't have to spend time. You're already in there anyways, usually running the final payrolls and getting everything ready for the year-end process. The other area that we ask people to, to take a look at and to think about is what's going to be a part of your year-end reporting, which is going to come up in the beginning of, usually the beginning of the following year. So usually January of, in this case, 2023. If you have a TPA, sometimes they start early, but you'll usually get a questionnaire of some sort, and it's going to ask you things like, did you have a fidelity bond in place during the year? If so, what was the dollar amount? Because that needs reported on the 5500. It's going to ask you, did you have any late contributions during the year? Because that's going to have to be reported on the 5500. Those questionnaires, if you've never done them before, they can be a little daunting. So, look and see, do you have last year's questionnaire? Can you get the questionnaire as early as possible? Make sure you got plenty of time to fill it out. Getting that questionnaire turned around quickly is really important, as well as if the provider is asking you for some type of year-end payroll report, a census. Those are terms we see a lot. That is going to get folded into the discrimination testing that your service provider is going to do. And that's very important that that gets done, that it's accurate and that it's timely. If it's not accurate, you can cause folks to have corrective distributions, which will become taxable to them that they weren't planning on. So we'll talk a little bit more about that here in a second. But very important that it's accurate. You don't want to be making mistakes because you're affecting people's incomes once you start getting into the tax situation. It's also important, it's timely, because if it's not done timely, you can actually have to pay additional excise tax because it's late. There are rules around that. So I don't know, Karen, any thoughts around on those topics?
No, I think you covered it, but the census is the one thing that it seems trips up a lot of people, what actually is needed, and your TPA should let you know what information they need if it's not something that you can just pull from the payroll report.
Right. Yeah. And if you have questions, I would strongly encourage you, don't make assumptions around this particular activity. Don't assume, well, they're saying this, but I bet they mean this, so I'm going to give them this information, because that can end up causing the test to either pass when it shouldn't or fail when it shouldn't. That can cause you to be out of compliance. I mean, you just start down a path you don't want to go down. So if you're not sure exactly what they're asking for, or it's a little bit confusing, did you mean this, or did you mean net pay? Did you mean full gross compensation, including everything? What exactly did you mean by whatever a term that they might be using? Get with your rep or call your service provider if you don't have a signed rep, and make sure that you get clarification. They should have some like booklet or handout, or could point you to a website page that can help give you very specific answers to questions, because the questions you have are questions everybody's going to ask. So they should have some kind of FAQ or something that they can either give you access to, or give you a copy of, or can go over verbally with you. But make sure you ask those questions. Don't assume, because we've seen a lot of really bad things happen in the space. We've seen situations where the compliance testing is done. They feel like, I completed that. I'm done over with that. The auditor comes in, you get looking at it, and half the company isn't on there. So now you've got to come back. You've got to do it. Now, obviously, it's late, so you're going to have a fine. Now it fails when it passed before because you didn't include everyone. So now people are going to get distributions. They've already filed their tax returns. So now, it just turns into a mess. And the people, we've talked about this before on podcasts, the people that usually are failing those tests are your higher level individuals. So the owner of the company, your senior management, people on your board, and those are not the people that you want to tick off. So not an area that you want to make a mistake in. And it's easy to make a mistake. It's a very kind of complicated area. So pay a little bit of attention here, spend some time, get ready. Another thing I like to always mention as we get to the end of the year and you're going to be flipping over into a new year, if your plan typically fails discrimination testing, reach out to your service provider, because there are things you can do. You can either modify the plan so that it will automatically pass some of these tests if that's something that you're interested in, or you can have them take a look and run some earlier tests. A little late now for next year, but you could start doing it into next year for the following year. That way they can start gauging, and there's different ways that individuals, those ones that are those highly compensated folks, that are the ones that are probably more likely going to fail, cause the test to fail, and they're the ones that are going to get those corrective distributions. There's things that they can do timing wise potentially that can help the plan not to fail. So that's another area we see some people want to explore. Again, talk to your service provider. It gets very complicated, not anything we can do on a podcast, but something that certainly you can talk to your service provider about. Karen, open enrollment.
Yes.
It's kind of that time.
Yes, we're actually going through open enrollment here. Just started this last week. Anyway, when you have your open enrollment, that usually includes all of your benefits. So you want to make sure, I'm going to put my glasses back on, to include the 401k plan in the discussions. And it might be helpful if you can get somebody from your provider to come in and talk to any of your employees or participants if they have any questions. That might be helpful. You want to make sure that you have all the materials that you need for the employees that they might need to use. I mean, like I said, we just had open enrollment. Everything was done online. So if that's the case, make sure that everything is running well. That way that everything's set up and that the employees can get in there. If you're using paper forms, make sure that you have an adequate number of paper forms. And just, be prepared to answer any questions that the employees might have. And we just finished talking about the compliance testing, and one of the things that helps you pass the compliance testing is if you have a higher participation rate. Generally what we see is that no matter what the highly compensated people are putting in, if there is a high rate of participation in the plan, generally those plans have a lower tendency to fail. That they usually pass the compliance testing, and you don't have those things. So really try to encourage, and that's why maybe bringing in an investment advisor or somebody from the provider could help, because they can really answer those questions that they might have. But why is this a good thing for me to do? Because I have seen in the past, I had a client where they had a whole bunch of union employees, and the union was telling them to not participate in their 401k plan because it would reduce their income for their Social Security, which is true. But with the Social Security being up in the air like it is that really the way you want to, the path you want to go down? It's like, okay, I'm not going to save anything.
Ignoring the whole retirement, saving for retirement, which is the whole purpose of 401k.
But that's what their union heads were telling them.
Yeah. Yeah, and which is who they would definitely be listening to.
And this was this was prior to Roth, so that might be an answer. So okay, well you don't want to reduce your income, then maybe you should do a Roth contribution instead. And the investment advisors and the service providers would be able to help answer any of the questions that they might have about those types of things.
Yeah, definitely. And I think one of the biggest things is that open enrollment, they tend to focus on your medical, dental, those kind of benefits. It's kind of, that's what open enrollment is. But really, open enrollment is another opportunity for you to stress with your employees that, it's a total compensation package. So It's your salary, it's all these different benefits, it's your PTO. It's the whole gamut. We don't want you as an employee to only focus on, we provide you health insurance or whatever element you're stressing. So I think it's a good time to put all of those things in the bucket and say, look, we offer you this total comprehensive benefit package, including, of course, 401k is one component of it. I think it serves a lot of different purposes, but definitely something to keep in mind, I think, especially timely as open enrollment is upon us in a lot of cases. You mentioned the investment advisor. Another area that I think is a good thing to look at, certainly more often probably than just year end, but year end's a good time to do it, is to work with your investment professional if you have one or multiples of those, maybe a company, and talk about the investments that you have in the plan, the lineup. Is it a good lineup? Do you have a variety of options? Now, this can go too far. We're not suggesting you have 100 different investment options, which we have seen.
Yes.
And we've had a few examples of that this year where people, I think they go overboard, and that just gets confusing to everyone when you have that many. But you definitely want to have a good variety that you're offering, not all just equity-based mutual funds, as an example. That would not be a good fund lineup. That's not diversified. So you want to have a lot of different options. You want to cover the different types of investments. You want to consider some short-term, long-term, higher risk, lower risk, all that kind of stuff, which definitely your investment advisor can help you with. But you also want to look at the lineup that you have. How are they performing compared to a benchmark? You don't want to compare a bond fund to an equity fund and say, oh, one's doing better than the other, because obviously that's driven by the economy. But you want to compare a bond fund to bond fund benchmarks, equities to equity benchmarks of that type. Is it a value? Is it a growth? Whatever it is. So again, that's where your investment advisor, they should not only they have the background experience to help you with that, but they have tools that they can run your funds through, compare it to benchmarks. They'll give you nice, nifty little graphs and show you, all these look good, but this one is kind of an outlier. We ought to take a look at this one. And we recommend that you do this not just annually, but maybe twice a year, maybe quarterly. It kind of depends partly on how big your company is and also what the market's doing. So if the market's fluctuating a lot, you might want to look at it a little bit more often. If you're thinking of changing funds, you might want to look at it a little bit more often. Or if you're thinking of changing providers, which will cause the lineup to change, that's another good consideration. We also recommend you document these discussions, even if it's just handwritten notes. There have been lawsuits that have come up recently about companies not reviewing this fund lineup. It is part of your fiduciary duty. So, like I said, even if you got hand notes and you could say, we looked at it, we considered it, but we felt it was okay, and here's the reason why, that's going to go a long way in protecting you if a complaint is raised or if there ever were to be a lawsuit. So, again, something to consider. If nothing else, if you maybe just had one of these meetings, we're going to talk about this here in a minute, but schedule out those meetings for next year. Make sure that your advisor's in good shape. You're happy with them. They're going to still be available next year. Schedule out those meetings so that they don't, everybody has good intentions, but a lot of times things fall through the cracks. So make sure that you're planning that out for next year. Karen, you talked about participation in the plan.
Yes.
You kind of already hit on this. This was our next level on here, but you want to talk about auto enroll?
Yeah, that's auto enroll is a good way to increase participation in the plan, because generally what happens for a lot of the time is you say, oh, I have a 401k plan, and unless it's you have where the eligibility is immediately upon hire or within a couple of months where you can do all of this during onboarding, generally what happens a lot of the time is they just don't do anything about it. So with auto enroll, when they are eligible, you give them a time period usually where they can opt out of if they want to. And if they don't opt out, then they are automatically enrolled at a certain percentage. And usually it's 3%, although I've seen 1% up to 4%. I don't think I've seen anything higher than 4%, although I'm sure you could do that if you wanted to. And you could add an auto escalation clause in there, which means that either on their hire date or maybe the first of the year or maybe July 1st or some certain date, they will automatically go up 1% or 2% usually, unless again that they opt out. And generally this will increase the participation in your plan, because just like people are inclined to not go online and enroll, they also are inclined to not go online and opt out.
Opt out. Yeah, or unenroll.
Yeah.
Yeah. And I mean, we have real life experience seeing this. I mean, the plans that we audit that are auto enroll have
Extremely
extremely
high.
high participation levels.
Yes.
I mean, almost 100%. They are very,
Mhm.
very high.
And that seems to be the case whether even if there's not a match.
Right. Yeah. And it really is just a human behavior thing that people just they won't take the time to go in and say, I don't want to do this anymore. It's good on the participation side. It can be a negative on the administration side if you have folks that you have a high turnover, a lot of people that come and go as employees. That can, you can end up with a lot of people that have $25 accounts and they've left and you can't find them and now you've got to disperse the funds. And so it can be a negative on the administration side if you are in that situation. But if you have a more stable workforce, I think certainly if you have a more salaried workforce, definitely auto enroll is something to consider. And the other thing we always mention to people, if you want to increase the participation, communication is key. We kind of talked about that already, but also adding a match or some other type of company profit sharing component, an end of year discretionary contribution. There's a whole variety of things. Again, talk to your service provider. We don't have time on this podcast to cover all the options, but definitely talk to your service provider if you'd like to increase participation. We talk to people that are frustrated. I go to all this effort to set up this 401k plan and then nobody wants to take advantage of it. Talk to your service provider because there are ways that you can work with that and bump up that service participation in the plan. We are just running about out of time here, so I'm just going to run through a couple of real quick hit things to do at your end that I think are good ideas. Good idea to just take a quick review of your plan. So am I okay with my plan document? Do I need to make any changes? Again, talk to your service provider. There are some new options out there, and we've talked about some of those options in previous podcasts. So if you're interested in that, go take a look at some of our previous podcasts. You'll get some ideas. But double check that. Look at your service provider. So that would be your payroll provider that you're using, your 401k administrator, whoever's holding the assets for your plan, your investment advisor, all of those. If you have a third-party administrator, all of those groups are service providers that touch components of the plan. So take a look at all of those folks. Are they all still relevant? Do they give you the service that you need? What's the pricing on those? Is it a good time to maybe do a bid on some of those services? So maybe you're fine, everything's good, tick the box, move on. But it's a good time just to think about that at your end. If you're thinking about changing, that'll give you plenty of time over the next year, to be looking at other options. Look at your procedures. Where did you have problems last year? Probably needs a procedure update. Maybe there's a control missing. Maybe there's training needed. Good time of the year to take a look at that. Same thing on the retention side. Did you have problems with your auditor asking for things and that you couldn't find them, or you'd thrown them away, or someone else had them and you couldn't get a hold of them? So look at those document retention guidelines. Year end is a good time to do that because that's usually when you get past year end and people start filing away things. So good time to take a look at the retention guidelines. The last thing that I'm going to bring up, and I think this is absolutely critical to running a good plan, is a compliance calendar. And it's now is the perfect time to sit down and say, what are all the activities that need to happen for my 401k to run smoothly? When do I need to give them that questionnaire for my discrimination testing? When do I need to give them the year-end payroll file? When do I need to disseminate my fee disclosure? When do I need to send out the summary annual report? When do I need to start asking about my Form 5500? If I need to get an auditor, let me plan that out. So there's a whole series of activities that you need to do, even things like my payroll. Sit down and say, what's my payroll schedule going to be for the upcoming year? And then talk to your payroll folks about, that is such and such a date. We need to have the 401k contributions submitted to the provider, same day, next day, whatever is your company requirement, but make sure that they have a clear understanding of what that is to avoid late contributions. So I'm only bringing up a few things. That compliance calendar would actually be a pretty busy calendar, but if you set that up ahead of time, you've got everything mapped out, you've assigned each task to an individual, then things aren't going to fall through the cracks where somebody, well, I thought Susie was doing it. Oh no, Susie thought Dave was doing it, and it doesn't get done. That can get you a long way down the road to making sure that your compliance is in good shape for your plan, and you're not gonna have problems with your auditor. You're not gonna hear from the DOL or the IRS, and things are all it's gonna run smoothly. It'll go a long way to helping with that. With that, Karen, any last thoughts you got on wrapping up your year end?
That also just would be a good time to look at who has access to your different systems.
Yes.
And make sure that those are updated.
Yeah, very good point. We see this a lot where people change roles and they forget to remove their access. It's kind of once you have the access, you keep it forever, and that's not a good thing. And especially in today's world with all the security issues that we've all seen, and we've done podcasts around cybersecurity. So if that's an area that interests you, go search out that podcast. But yeah, year end's a good time to map that out as well. With that, we're going to wrap up this month's podcast, and we're going to let you go away and work on all those tasks. I'm going to throw out my email address one last time in case any of this that we talked about sparked your interest, or you'd like some additional clarification on some points. My email address is the letter KMOORE. So again, KMOORE at anderscpa.com. That's ANDERSCPA.com. Feel free to drop me a note. Be happy to chat with you or answer questions, get you material. Or if you have a suggestion for a future podcast, we're always looking for guest participants and additional topics that might be of interest to our viewers. Otherwise, with that, we are going to wrap it up and thank everyone for their listening today, and enjoy the rest of your day.
Enjoy this podcast? Visit our website at anderscpa.com/401k to get more tips and strategies for achieving 401k audit success. We're here to be a resource with ever-changing rules and regulations.